So thank you again for being here this afternoon to talk about a very important topic, and that is understanding federal student loan repayment. These are just some of the basics, talking about hopefully getting us free from some of those student loans and coming up with some strategies in order to make all that work. So before we really get started, it's probably just very nice to introduce myself. That's just polite. I'm Tony Byer. I am our financial wellness coordinator here for Ultra Federal Credit Union, also a certified credit union financial counselor. So pretty much everything financial education, I've got something to do with it here as well. So it's a great position to be in, great job. So, and had to go to college in order to get this job. So student loans, yeah. So what we're going to be covering in our brief time together, we'll talk about student loan landscape, why it's such an important topic, and then also what's new. There's been a lot of changes since federal student loans started becoming due. First payments were due back in October here after the pause after a couple of years due to COVID. Understanding your student loans, how to find out information on that, who are your servicers, and how to get in touch with them, and if there's any changes you need to make, how we can go about doing all of that. Also, we'll talk about the different federal student loan repayment plans, loan forgiveness. Yeah, let's make those loans go away. Cancellation or even programs to discharge those student loans. Managing repayment, and then also creating a spending plan. Really important here. And then we'll talk about some resources and tools available, and wrapping up right around 7 o'clock here, Central Daylight Saving Time. But before we get started, I want to hear from you. What comes to mind when I say the word student loan? So you could put that in the chat if you'd like. Also, if you are on Teams, not doing it through the browser, we'll launch one of the polls. Already see the word stressful, unfortunate, yes. So it's coming through, and then word cloud as well here. Fill that out, or again, just in the chat. So yes, I'm seeing annoyance, paying them off. Take some time. College. Yep, Lily said that. Yeah, so mixed emotions, but it does create some stress, some anxiety. That is perfectly natural, perfectly normal, and anything we could do to try to reduce that. And again, glad that you're here to learn more about how to repay those student loans, those federal student loans, is what we're going to be focusing on here today as well. So there we go. Got a response there. Very good. So yes, like I said, debt, annoyance. I'm going to be paying those off for quite some time. Hopefully, we'll be able to help and get you some information and where to go with all of this. So it is an important topic because according to the College Board, this was like in the 2022 or 2021-2022 school year, they said that students graduated with just shy of $30,000 in student loan debt from public and nonprofit colleges. These are undergraduate degrees. Some of those graduate and professional degrees, those balances may possibly be larger as well. So it is affecting millions and millions and millions of people. More than 40 million have student loans. At the end of 2023, $1.7 trillion worth of student loans as collectively we own as Americans. That is it's right there with automobiles as the second highest debt basically that we have as a country. Mortgage and housing debt, that's number one. But yeah, more than $1 trillion worth of debt. And it's causing a lot of things, a lot of hardship, like we just mentioned in the chat. And then also, it may come as no surprise, but last year, the University of Georgia, the researchers there, they found a link between student loan debt and high levels of mental health issues, depression, anxiety, fear. All of those things happen. And also, because of the student debt, many people, they are delaying major life events, getting married, starting a family, buying a home, a car, saving for the future, saving for retirement, because they're having to put money towards their student loan debt as well. So it's not only affecting us, as individuals, it's affecting us as a country, as a society as well. So again, glad you're here to learn a little bit more about how we can try to repay those loans. So what's happened? What's new since student loans? Back in, I believe it was June, when the student loan pause ended, and payments again were due, I know, in October. But there was a debt cancellation plan, but unfortunately that was canceled by the Supreme Court, so that did not happen. But since the pause has been lifted, to get borrowers on track, to get them used to making that payment, because for a couple of years we didn't have to do that. There's a 12-month on-ramp period to resume payments. So payments that haven't been made since student loans have gone into effect, that's not going to count against you. That's not going to be negatives on a credit report or anything like that at this time. But interest is still accruing during this period. Also, the SAVE plan, the Save on a Valuable Education. We do love our acronyms here, government. So that is a plan that's introduced and actually replaces the Repay plan that we had currently. That was the revised extended pay-as-you-earn plan. So we'll talk a little bit more about what that means for borrowers trying to help with lower payments and trying to provide some relief. Making loan forgiveness more accessible to more borrowers as well has been the goal of this current administration, at least. The Fresh Start program for borrowers who have defaulted on loans in the past before the pause as well. Ways in order to get loans back into repayment, back on track, and to remove some of that negative information from credit reports as well. And then also last week, it was announced, I know here in Wisconsin, talking about a plan to help borrowers right now and trying to cancel some loans and things like that. And more details were released today, and we'll know a lot more, it sounds like, tomorrow. So it was announced that students that have basically, they're calling runaway interest, basically students making payments, and their interest was actually causing their loan balance to grow. So it's what they're looking to do is help loan borrowers who have seen their loans basically balloon because of interest, and they're making their payments like they're supposed to, but the balances aren't going down. So helping those that have loans that for more than 20 years. Also, there are plans to discharge more loans and really trying to help others. So we will know more in the coming days, and they're hoping some of those changes can come into effect later this summer or by this fall as well. But so keep an eye out for that. Who knows what's going to happen? It's really hard to predict what's going to happen when it comes to all of this and government and everything like that. But there are plans to try to help. So hopefully we'll see. So when it comes to knowing your loans, that's going to be the first step that we want to know in understanding our loans. So that really all starts with your student loan servicer. So you can find out who your servicer is, and a lot of this information, you can see the link at the bottom of the screen. It all comes from studentaid.gov. That's going to be your one-stop shop for a lot of this information here. There's going to be a dashboard that, if you haven't done that already, log in, and that's going to have information on your servicer. So that is who you're going to contact when it comes to billing, repayment options, if you are looking to do loan consolidation. So a few different loans, bringing those together, and then also loan forgiveness, helping those loans go away. You should contact your servicer whenever you change your name, any address, phone number, basically really life events, anything that happens, let your loan servicer know. They're the ones that are going to be working with you. They're the ones that are going to be taking payment and everything for these student loans. And there's a few different servicers. as well. And if you have any questions about your bill, about your student loan, about your repayment plan as well, your servicer can help you, and they help you free of charge as well. So know that. So if you haven't gone on to studentaid.gov and gotten on the dashboard for your student loans, here's an example of what it's going to look like. So it's going to have your loans. So if you have one loan, if you have multiple loans, the principal of the loan, that's what you actually borrowed. So on this graph, that's going to be the blue area. And then that dark area, that is going to be the interest that is accrued. That is the cost of borrowing. That's that extra as well. You'll see, notice towards the bottom left-hand corner, it'll have the activities. So if you've made any changes to a repayment plan or have applied something else, that's going to have that information on there. So this person, Bill, they applied for a income-driven repayment plan. So we'll talk more about some of those plans here in just a moment. Upcoming payments, and then on the right side, it's going to have information how to get a hold of your loan servicer directly. That information is going to be on there. They're the ones, taking the payment, answering questions, and again, doing it all free of charge. So with all this happening, with student loans, with federal student loans, there are scammers out there trying to take advantage. So know that student loan servicers, they help you free of charge. So if you are contacted by someone asking for money, get away from it. It's not your servicer. Get away. You never have to pay an outside company for help on your student loans. They'll help you free of charge. And it's a good idea, too, when it comes to communicating with your servicer. If you are able to, mark those emails as important or star them, Gmail or whatever, they're going to come through and they're going to get your attention as well. So it's legit. But again, if they are promising fast student loan forgiveness, get away from that. The government seals could be faked. They want money. They want your information. They want your FSA ID. Don't give them that whatsoever. And in fact, I don't have any student loans any longer. But just last week, I got an email from someone saying, "Hey, your student loans, good news, they've been forgiven. Click on these links." No. Don't do that whatsoever. So be on the lookout for scams. Something seems too good to be true. It more than likely is. When it comes to paying back your loans, know your grace period. So that grace period is going to be a time where you don't have a payment due. So this is going to be after, let's say, you graduate, or maybe if we drop down below half-time enrollment. So that's going to be less than 6 credits is what they consider to be less than half-time when it comes to being enrolled. And different loans are going to have different grace periods. So our subsidized and unsubsidized loans, our federal direct loans, that's going to be 6 months after graduation, or again, dropping below half-time. Just a reminder, the subsidized loans, Uncle Sam and Aunt Samantha, they're the ones taking care of the interest while you're in school. So those are not accruing interest while you are in school, while you're enrolled. Unsubsidized loans, those are accruing interest the entire time while you're in school. If you have a Perkins loan, I know that program was ended, I think back in 2017, but we may have some of those loans still hanging around. That may be 9 months. Those are actually loans that were given by a school, typically those with a lot more needs. So those may vary a little bit. So if you do have one of those, contact the school that would have the loan. If there's a Parent Plus loan, those vary. So if it is a parent taking out the loan, those payments are going to be due. It goes into repayment right away. Now, if a borrower, let's say they are a graduate student or going for a professional degree, perhaps, and taking out a plus loan, there may be 6 months with that one. But again, best site to go to studentaid.gov to get more information on these. And we are talking about federal loans with this, but if you do have any private loans, that's going to be from a bank, credit union, issuing company, check with them. Those vary quite a bit as well. So check with your financial institution or that issued the loan. But know that during that grace period, so you don't have a payment due, and that's so that you have time to get settled, find a job, do all that. Interest is still accruing during that time. So you don't have a payment due, but the loan is growing due to interest. And if you're able to make payments during your grace period or even before your grace period, while you're still in school, even better. That's going to reduce the interest that you're going to pay on your loan as well and help you save money if you're able to do that. So let's talk about repayment plans. Got another true or false question for you here. I know that you're saying, "Hey, Tony, I was told there'd be no test." Well, it's not a test. It's not an exam because those create anxiety. It's an assessment. So true or false? You are automatically entered into a standard repayment plan unless you contact your servicer. Is that true or is that false? Feel free to put your answer in the chat. I'm seeing a lot of trues, and you are all correct. Very good. Yes, that is true. That is the standard is the standard. That makes sense. So that's going to be a 10-year plan. It is fixed. Your payments every month are going to be exactly the same with that. But that is the what you automatically do. If you do nothing with your student loan, that's what you're going to be put into. It is going to be that standard repayment plan. So talking about some of those repayment plans, there are 7 of them, 8, I guess, if you count consolidation. There's the standard plan, like we just mentioned. There's the graduated plan, and then there's the extended plan. These plans are all fixed. So that means every month you're going to be paying the same amount. With these, standard plan is 10 years. Graduated. Actually, next slide, I've got more info. The extended can actually be more than that 10 years. That works. And then the last 4 on our screen: the save plan, the saving on a valuable education, pay as you earn, income-based repayment, and then also income contingent repayment. Those are income-driven plans. So we'll break down first those fixed plans. It's going to be based on how much you owe, your interest rate, and that time period as well, these fixed payment plans. So if you are looking to pay off your loan in a set number of years, a certain number of years, these are going to be the plans that you want to look at. So again, that standard plan, it is a fixed amount, 10 years. And if you do nothing, that is what you're going to be put into. But there is also a graduated plan. So with that one, the payments start off lower, and then they increase typically every 2 years. So the purpose of that is to say, all right, you graduate, we're probably going to be more of an entry level position, or maybe not quite highest paying. And then as we go through our career, we'll more than likely be earning more with this. And just like the standard plan, it is also a 10-year plan. And then there's the extended plan as well. Payments can be fixed or they can be graduated with this plan. And your loans are paid off in 25 years with this one. Now, this is limited to those with more than $30,000 in direct loans with those, or if you have a loan still from the Family Federal Education Loan. That was quite some time ago. I think that program was ended in 2010, but there may be some of those loans still hanging around with those. So these are going to be your fixed payment plans. They're going to help you save the most on interest, especially the standard plan with that. So if you want to knock it out 10 years, pay the least amount of interest, that's going to be the plan for you. But if you've got a goal, you want to do it with a certain period of time, these fixed payment plans are something to look into. Now, I want to talk about income-driven repayment plans. Now, those last 4 that we had a couple slides ago. So they base your monthly payment on how much money you make and also your family size as well. So if you satisfy a certain number of months of qualifying payments, you can get the remaining balance of your loans forgiven, usually after 20 or 25 years, depending on the plan. But no, and we'll get into this later, but amounts that may be forgiven, they may not be forgotten when it comes to tax purposes. Currently, right now, under the American Rescue Act, or is it the Relief Act? It's one of the two, but I know until the end of 2025, right now, if you do have loans that are forgiven, you are not charged federal income taxes on those. That's not counted as federal income for tax purposes. The state may do that. Different states, some are charging for that, some are not. I can tell you that. For many of the plans, Wisconsin, where we are at, many of them don't at this time. They are with the federal plan. They are mimicking that. But if you have amounts that are forgiven under the income-driven repayment plan, anything forgiven, that may be taxed. I could tell you here in Wisconsin, but yeah. So look up your states. So know that as well. Uncle Sam and Aunt Samantha. I know. They like their tax money. And plans, these income-driven repayment plans, they do require recertification every year. Even if there's no change in your income, your family, you still need to verify that this information is correct. So there's some work that you need to do on your end, even if nothing has changed with these. Like I said, there are 4 of these different plans. The SAVE plan, that is the newest. And what it does, it looks at your discretionary income. So for the purposes, and we'll get into the next screen on how that's calculated, but it basically looks at the federal poverty rate, and it, depending on the plan, it multiplies that and then looks at your income and then takes a portion of what's remaining. They consider that your discretionary income. So they're trying to leave you some money, for the necessities, for the really, really important stuff. So, and we'll show you how that breaks down here in just a moment. And also under the SAVE plan, because that looks at 225% of the federal poverty rate. So for a single person, that's a little more than $15,000. Looking at that, there are potentials with that plan where someone can have a $0 payment. And then also, if interest rates, the payment, the interest rate, if that is rising, if that's going to make the loan balance grow, with that SAVE program, the government's actually taking care of the additional interest that would cause that balance to grow as well. And if you don't have to make a payment, it comes back that your payment is $0. Those $0 payments can still count towards forgiveness, and talk about that as well. The pay as you earn, that looks at 10% of your discretionary income, but your payments are never going to be any more than they would be under the standard repayment plan. So that's the highest they're going to be comparing to that standard plan. So you're never going to pay higher than that when it comes to that plan. The income-based repayment plan depends on when you first took out the loans, either 10 or 15% of your discretionary income. And again, it's capped off where that 10-year standard plan would be. And then there's the income contingent plan. So to make things a little more complicated, it looks at 20% of your discretionary income, and the amount that you would pay in a repayment plan, it's a fixed payment over 12 years according to your income. Now, I know all of this is probably, that's a lot of percentages and a lot of different plans. The nice thing on the studentaid.gov, there is a loan simulator, and I really recommend everyone check that out. What's going to work for you when it comes to repayment. So you could put in your loans, different scenarios, and it could break down under each plan. How much are you going to pay each month? How much are you going to pay in interest? And then when are you going to pay off these loans as well? So to break down a little bit more about the newest plan, that SAVE plan, Saving on a Valuable Education, like I mentioned before, it replaced the revised pay-as-you-earn plan. It's going to lower payments for most people because it's looking at much less of your income. That adjusted gross income, and what they considered the AGI, adjusted gross income, that is your taxable amount. So yesterday was tax day, so I'm sure we all know our taxes, or at least have some of that information in front of us. So that is what they are looking at when it comes to these many of these income-driven repayment plans, they're looking at what's that taxable amount of income that you've had. Also, it's got an interest benefit. So if you make your full payment, if it's not enough to cover that interest, the government, like I mentioned, is going to cover the rest of that interest as well. So prevents your balance from growing due to unpaid interest as well. So they've called it that runaway interest, that you're making payments, you're making the payments like you're supposed to, but the balance is not going down. If it's going up. So they take care of what's going to keep that from going up. And then as of February, borrowers who originally borrowed $12,000 or less, they can qualify for forgiveness after as few as 10 years under this plan as well. And there's going to be more things that are going into effect summer of 2024. And, like what was mentioned today, some more of the details of that student debt relief plan. And like I said, we'll know a lot more tomorrow. Those are going to be released. And then there's a 30-day review period, a 30-day comment period. And then that's going to hopefully move forward. So from what I was reading about it today, the last plan that they had that the Supreme Court struck down, that tried using laws underneath the like the COVID Emergency Act. I guess the mechanism they're using for this one, it is more tied to the Higher Education Act as well. And they think it's got a lot more solid footing. So hopefully we'll see. But like I said, it's hard to count on anything. So we'll see how that discretionary income is calculated. So they're trying to look at what's that extra after needs and everything are met with this. So it's the difference between your annual income and the poverty guideline here as well. So, and those poverty guidelines, it depends on where you live. So the information up here, that is for the 48 continuous continental United States and District of Columbia as well. There are slightly different numbers for Hawaii and also Alaska as well. But like I said, that SAVE plan, it's going to look at that federal poverty rate, multiply it. So the SAVE plan, 225%, and then take a look at what your gross income, and then it's only going to take, again, 10% of that. And depending on that plan. So you're with an income-driven repayment plan, you're more likely you're going to have a lower payment than you would on a fixed plan, but you're going to be paying longer on those plans more than likely. And also you're going to pay more interest on those as well. So all things to consider. And that's why using that loan simulator is really important. We can also consolidate. If we have multiple loans, there's an option to do a consolidation. So you can combine one or more federal loans into a direct consolidation loan. It could possibly lower your monthly payments, give you access to forgiveness programs as well. There's no application fee to consolidate your federal education loans in doing this. And then also your loans must be either in repayment or at a grace period. So basically you need to be done with school or graduated with it. So you're not able to do a consolidation loan while you're still basically using your loans. So they basically want the dust to settle, I guess, on your loans. And then we could do that as well. So there are pros and cons when it comes to consolidating your loans. So we'll talk about the positives first. So you have a single payment. If you have multiple loans, multiple servicers, it's going to be just one single payment. There is the potential to lower your payment as well. You have access to those income-driven repayment plans, like we mentioned, and those forgiveness options that could be a possibility as well. And you've got a fixed interest rate as well with that. So that interest rate is not going to change with your loan. So some not so great things. You're more likely going to have a longer repayment period than you would have otherwise. So it's going to take you longer to repay your loans. You'll pay more interest over the life of the loan. If we're stretching that out, we will pay more interest over time. There may be loss of some of those borrower benefits that we may have with some of the loans. But like let's say you have, I know one of them, maybe you have a Perkins loan, an older one that may possibly be forgiven under that program. If you were to consolidate that into other loans, you lose that forgiveness, but you don't have to consolidate all of your loans either. So that's something that you can keep separate. So good things to know there. So you don't have to consolidate all of your loans as well. And then also, if you apply for consolidation while you're in your grace period, so during that 6 months after graduation, or if we drop down below half time, repayment begins right away. So you lose the rest of that grace period. So if it's something you're thinking about doing, you can consider maybe waiting until you're almost done with that grace period. But again, know that during your grace period, interest is accruing as well. So you want to pick the repayment plan that is right for you. So like I said, you're automatically enrolled into the standard plan. But ask yourself, and what's going to work for your plan? Do you want affordable payments, lower payments, and stretch out that loan? Or do we want to get this done, quickly repay it, and pay the least interest and look more towards those fixed repayment plans that could be repaid in 10 years? So that spending plan include your fixed costs, your variable costs, your monthly income if it's not consistent, if you're not salaried, or if you have other income coming in. So consider all your income. And if it varies, go on that lower end of your income. So I always say overestimate your expenses and underestimate your income in order to make that work, because there may be times where you've got more. I mean, we just had tax day yesterday. Maybe you have a tax refund, but you don't have that all throughout the year. So you can't count on that each and every month to get this tax refund. So kind of baking that into your plan. And then also there's going to be times where you have more expenses as well. If there's birthdays, holidays, end of the year stuff. I know in our house, December's not great because property taxes. That's always just a fun bit, and that's not a fun bill whatsoever. But that's something that we've got to plan on and expect as well when it comes to our spending plan. And then look at how much can you afford. So it's a general guideline, a general rule. You want to try and not exceed 10% of your gross income. So again, that's going to be what's considered for tax purposes. And then that loan simulator, like I said, just if you haven't gotten a chance to do that, can't stress that enough to try and find something that's going to work for you. So yeah, let's talk about getting rid of these loans. So forgiveness, cancellation, discharge. So you won't have to pay back some or all of your loans. So there is a teacher loan forgiveness depending on where you're working and what subject you're teaching as well. So it's anywhere from $5,000 to $17,500. It's 5 years, 5 consecutive years that we need to be making payments and teaching during that time. So that is a possibility to get a big significant part of your loans forgiven. There's a federal Perkins loan teacher cancellation as well. So if you still have those Perkins loans back in the day, still around. Public service loan forgiveness, that's probably the big one that we have all heard about on here as well. So that is 10 years of on-time consecutive payments, and depending on your employer, the industry, where you're working, may qualify you for public service loan forgiveness, and total and permanent disability discharge as well, if that has happened. Now, one note I wanted to make with the teacher loan forgiveness and let's say the public service loan forgiveness, you're not able to use both of those at the same time. So know that if you're a teacher and you're going for public service loan forgiveness, that's what I would look at first. Because if you do the teacher loan forgiveness, that's going to be after 5 years. Well, those 5 years don't count towards the public service loan forgiveness. So look at your options and what's going to work for you. Basically, they just say you can't double dip. You can't get both the teacher loan forgiveness and then the public service and do that. So yeah, consider your options and your plans there. So there's forgiveness, discharge, and cancellation. So went over those plans. The most typical way that people get rid of their loans, it's through repayment, and through those plans. But loans can be discharged. I know this has already gotten dark talking about taxes and just mental health, anxiety, fear, but let's talk about death. Let's add that to it. So that can get rid of student loans. Also, borrower defense. So if college you went to, if they didn't do things quite the right way, or maybe you've heard about them in the news, or things have got in trouble, that's a possibility to get loans discharged. For the most part, bankruptcy is not going to discharge your loans, but there may be some instances where it could potentially go away in a bankruptcy. Not something that I would count on. And then just if there's any fraud or anything like that with these student loans. Like I mentioned, the Biden-Harris debt relief, they're trying another program. We'll learn more about that soon. And then again, it could be canceled because of things happen at the school as far as being misled, lied, maybe some things that weren't quite on the up and up with the education as well. So if you are able to prepay while you're at school, while loans are out there, so that's going to really help you pay lower interest over the life of the loan if you're able to make payments while you're in school. If you're able to set up auto pay with your loan servicer, that's really going to help as well. Actually, I've read about some loan servicers that they may give a discount if you do auto pay. You basically have your checking account, or you have that account linked directly with your servicer. One of the numbers I saw was 0.25% of a reduction. So every little bit really helps. Also know that if you are making more than and you really want to make more than the minimum payment on your loans, but also know that some loan servicers, and you want to make sure you work with your servicer, and that's why having that relationship, knowing how to get a hold of them. If you do pay extra, they may put that overpayment into a future credit as well. So if you want that, let's say your student loan, it's $150 and you pay, let's say $200, let that servicer know, I want that extra $50 going to the principal of that loan. Don't put it in a bucket and save that for next month, let's say. So if you are making multiple payments, or if you are paying extra, make sure that's going to be going towards the principal, and they're not just holding on to it and just for another month as well. So that communication is key. So make those additional payments. But like I mentioned, if you are making payments while you're in school, they do not count for qualifying payments for any loan forgiveness programs as well. So when those loans go into repayment, that is when basically the clock starts with some of those loan programs, those income-driven repayment programs. So creating an effective spending plan, really important to try to manage all the costs that we're going to have as a college graduate, but then also balancing these student loans. Identify those personal, professional goals, those priorities, those needs. Those come first. We got to think about all of those. Evaluate those trends. Like I mentioned, there may be times of the year where we're making more money. There may be times of the year we have more expenses, and just kind of planning ahead for those. Develop a timeline for the month as well. That can help let you know your cash flow. It's great, especially if you're a very visual person as well. So knowing that, let's say I get paid on the 1st and 15th, so we know that we get paid there, and so we're not like, hey, on the 15th, I'm like, whoa, I'm a millionaire. I'm going out. I'm doing all these things, and woo, yeah. But then forget like, oh, I have these 2 bills due next week. So try to break out of that that payday debt cycle and paying a whole bunch and really not spending that money that you think you have, but you actually don't because you've got to pay those bills and those obligations as well. Keep your plan simple. Pen and paper works great, especially if we're just getting started with all this. We can operate on a cash only basis. The envelope method it's been tried, tested, and true. I think it's being called the cash stuffing method. It's having a moment right now on TikTok. But you've got an envelope for all the different major categories of spending, and that's going to keep you on track, on target. And also the nice thing about cash, you can't go into debt with cash. We can go down to zero, but we can't go below zero like we can with a credit card, especially even a debit card as well. There's different apps and programs, or if you're into the whole spreadsheet thing with macros and pivot tables, awesome. But do something that works for you. And I recommend, if we haven't done this in a while, or if we haven't put together a spending plan at all, keep it simple. One size doesn't fit all when it comes to, a budget system. Like I mentioned, that last plan, the cash, the envelope method, a good friend of mine, he's done it really pretty much since college. It really works for him. I know it wouldn't work for me. I get a little cash in my pocket for whatever reason. My pocket gets a little warm and I got to spend it. That's me. I'm a lot better with a debit card, with a credit card. But I know not everyone's like that. And so know thyself. And then review, revise, rinse, repeat when it comes to your spending plan. It's always changing. It's dynamic. It's not set and forget it. No, not at all. So those are some keys to creating a spending plan, something that's going to work for you. When it comes to credit, know how student loans impact your credit as well. So yep, you're borrowing money. It is considered an installment loan. So installment loans, installment debt, that's looked upon more favorably than something like credit card debt, like something that would be considered revolving debt as well. So know that impact, and how making on time payments are going to help your credit standing, your credit score, which go into a lot of things. Helps you build that positive credit history as well. So in the future, you're more likely to be approved for loans, or pay lower loan rates, help you save money, employment, getting an apartment in the future, maybe, insurance, financing a phone, or setting up utilities or something like that. So having a good credit history, really, really important. Making payments in full on time. If you do that with a credit card, you pay zero in interest. So know the implication of credit cards, what the cost is. Make sure you have a plan for it. Can't stress that enough. But again, make those payments in full on time. You pay nothing in interest, and you get all of the benefits for it. Try limit your debt as well. And then if you have to repair, improve your credit, slow down on opening new credit accounts. Only do that when you really need credit. Try sticking to cash only basis, or we're not using our cards. Or you could literally put it in the freezer and literally freeze it. Why not? With that, but it's going to take on-time payments, reducing the amounts owed, slowing down on opening new credit accounts, and then the passage of time. Those are the big things that are going to help your credit. Don't listen to the commercials at 3 a.m. saying we can raise your credit 300 points overnight. No, don't believe it whatsoever. A lot of times they're doing what you could do yourself for free. They're just inundating credit bureaus with just everything negative. And if it is something that is factual, that is something negative, there's no legal way to remove it. But the older it is, the less impact it has on your credit. So I did mention that on-ramp to repayment. It is in effect until the end of September. So those with any late, missed, partial payments, you're not going to be reported as delinquent, default during this period. So it's really to try to help you get back on track, but know that interest is still accruing. So the loan's not going anywhere. It's just not counting against you on your credit report if we're not making payments, or if we haven't made payments in full, or if we haven't done it on time. But still make your payments, especially if you are pursuing that public service loan forgiveness as well. But to try to get back on track. So not only is there the on-ramp going on right now, but if you have a defaulted loan in the past, there is a fresh start program as well to get back on track. So they're special programs for borrowers with defaulted federal student loans. So a default is considered going quite some time without a payment. I want to say 9 months, so 270 days with that. So those defaulted loans, they are transferred to a loan servicer. They may have been in a default management group or debt management group. They are returned to in payment status, so they are no longer considered default any longer. Any records of your defaulted loans, those are actually removed from a credit report. And then once those loans have been transferred, they can apply for an income-driven repayment plan, which are going to be more than likely lower payments to try to help get back on track. But this program does end, just like that on-ramp, at the end of September. So we'll need to work quickly if you do have loans in default currently. And also a common question that we've gotten here at Ultra, some of our coaches have said, I've gone quite a while without making any payments. I'm just going to continue now making payments. That works well for me. What happens if I don't pay? Well, a few things. You lose eligibility for additional federal student aid. So that not only includes future loans in the future, but also that would be grants, possibly scholarships as well. So all of that is considered student aid. Work study opportunities as well. Those may be affected. So it's not just loans that you would lose access to. It'd be grants and some of that other money that you don't have to pay back. It's going to be reported to the credit bureaus. It's going to damage your credit. So those credit bureaus, the big ones, Experian, Equifax, TransUnion, there are more than 3, but those are the big 3 we typically think of. So tax refunds, that may be affected. Any other federal benefits, those may be withheld if we don't make any payments and we're not working with our servicer when it comes to our student loans. Wages may be garnished. So not only are taxes taken out of our wages before we even get that paycheck, but also student loan money might be just garnished, just taken from our bill, our income before we even get it, before that paycheck. We can be taken to court as well, and may be liable for those collection fees, those court fees, lawyer fees, all those things. So it can be pretty damaging, and it can be pretty expensive if we don't pay on our student loans. So if you are struggling, don't ignore your student loans. I know this is an old reference, but they are like the Terminator T-1000. Like, they just get bigger, stronger, meaner, and they don't go away. There are long, consequences to delinquency, to default. So work with your servicer. There's always options. We can change our repayment plan. There may be the opportunity for deferment or forbearance. So both of those are going to be times where we don't have a payment due. Typically deferment, interest may not be may be accruing, so growing while we're in deferment. Forbearance, interest is going to be so we don't have a payment. It's not going to count against us, but our loans are growing while we're not making those repayments as well. So that may, if there's a hardship, if there's some sort of emergency or something happens, you may be granted those things. So a time period without a payment, and then also possibly loan consolidation as well could be something that may help as well. But a big thing, work with your servicer. They would rather take some part of a payment than no payment whatsoever. And if you reach out to them, they're going to be more likely to work with you than them having to go track you down and find you. How can we shrink our student loan debts? Making payments. If you're able to break down those payments and make more than just one payment a month, that may be able to help shrink your debt, and also you're getting that instant gratification, that feedback, like my balance it's going down. Have a spending plan. Do the best you can to stick with it. if we get off track, if things unexpectedly happen, that's life. Do as best you can to get back on track. Life happens, things happen. Give yourself some grace. If you're able to pay off unsubsidized loans first, certainly do that. And again, those are those loans that are accruing interest while you're in school. So that interest is growing while you're in school. Subsidize, Uncle Sam and Aunt Samantha, they are the ones paying for that interest. So it's not accruing interest with that. So yeah, the loan that's earning interest on the interest, take care of that. That's going to be a bigger loan. Make more than the minimum payment if you're able to. Really important. And then if any other additional income that we're able to come by or able to make, if you're able to put those towards student loans as well. So, any other extra part-time work or freelance work, or I know we've talked about those side hustles and things like that. If you're able to put those towards your student loans, that is definitely going to help. And then also if you receive money, whether that be from tax return, like we mentioned, or inheritance or something unexpected, win the lottery, who knows? That'd be nice. Put that towards student loans as well, any unexpected or any windfalls as well. So talking about shrinking our student loan debt, hopefully getting rid of it. One more speak out. So try to make this one a little bit happier. And you can put this in the chat if you like. How would the absence of student loan debt affect your life? If you didn't have these student loans, if you didn't have this burden on you, how would that affect you? What would change? So Olivia saying less stress. I'm seeing that. Relief. Yeah, so it definitely would do that. Take some of that stress away. Absolutely. So it's a significant cost that we have. Libby's saying, more money for other goals, other things that are important that you'd want to do, other payments that we may have as well. So it would childcare. Oh, that's a big cost right there that David's talking about. A new car, money in account, financial freedom, buy a house. So yeah, these positive things. Trying to talk about that here at the end. So hopefully some of this advice will be able to help. But one is just here at the end, send you with a little bit of a checklist, some things to think about. So if we have not graduated yet, review your loan history. So going on to studentaid.gov and taking a look at your different loans and servicers. Get to know them, set up an online account, and then you'll be required to complete exit counseling as well. So understanding that cost of borrowing and everything at the end. So this is before graduation. Let's say we just walked off the stage. Woo! Yeah. We're in a grace period. So know when you have to start making payments. You don't want that to be a surprise. Create a spending plan, something that's going to work for you, and then incorporate those future payments that we're going to have. We can possibly consider loan consolidation as well. So take a look at your options. Again, that loan simulator is really going to help. Set a goal for repayment. So is your goal I want to get this done in 10 years, or I want to get this done in a set period of time? Or do I want to try to save, make, lower payments and stretch that out. So what's going to work for you and what's your goals? Select something that's going to be affordable when it comes to your repayment plan. Look at your options and then know if you're eligible for loan forgiveness based on your employer, based on your job. So do some research and look for employers that may qualify. I know one of the things that you may need to put into the database would be their employment identification number. As well, which you should be able to get from HR. It might be on your pay stub as well. I'm not entirely sure on that one, but and also some employers, as part of a benefits package or something like that, they may actually reimburse, or they may actually pay towards student loans as well. So that may be another benefit, something to consider. And then when those payments begin, the grace period is done with these federal loans. Make on-time payments with your loan servicer. If you're able to enroll in automatic payments, that may help you save on interest. You don't miss any payments with this as well, and you're not having to mail something in and write a check or something. I haven't written a check in a long time. And again, some servicers, they may do a little bit of a discount as well if you enroll in automatic payments. Know your options if you can't make a payment as well. Work with your servicer, really important. Understand how student loan interest, they may affect your taxes. So depending on how much money you make and how much your student loans are and the interest that you pay on the student loans, you may be able to get a tax deduction at tax time as well on those student loans perhaps. So, work with your tax professional or software or things like that as well. But that is a possibility. Here at the end, some resources and tools. So a great site to look at, it's going to be studentaid.gov. That's where there used to be studentloans.gov. It used to be this, and they've tried to consolidate everything into one helpful mega site, really. But that's going to be a great place to go. Ultra.org is another. We've got a lot of different resources, programs, people, especially on our financial education page. Taking a look at that drop down, a lot of information there. In most of our offices, we have financial coaches as well that are certified credit union financial counselors. We even have people that can meet online or even talk over the phone. So some of our member contact center people may be able to help if you're not around one of our Ultra offices. I really recommend checking out annualcreditreport.com. That is the only place where you can get your credit report free from each of the three big credit bureaus, Equifax, TransUnion, and Experian. And you could do it once a week on those. It used to be once a year, but that's another change since the pandemic with this. And then GreenPath, financial education as well, is another service that we have, and you could find that on our website, ultra.org. But there's a lot of different webinars, resources, people, and they have financial counselors as well that can work with our members and actually for free. And then some of the more advanced things, there is a small fee to maybe say put together a debt management program or plan. Or something like that, but another great resource. But know that there is a lot of help. So there's know that you're not alone. Like I said, there are more than 40 million student loan borrowers out there. So know that you're not alone, and there's a lot of help out there for you as well. So really appreciate your attention, your participation through all of this. We can.